You're watching Stockwatch. I'm Zinati Kuma, and joining me to unpack your stock-related questions today are Pierre Verster from Protea Capital Management and Alex Duys from Umthombo Wealth. Be sure to send your questions through via email to stockwatch@bdtv.co.za, via SMS on 41392 or on X at Business Day TV using the hashtag Stockwatch. Thank you so much for your time, gents. Let's actually start off with Nvidia, where we have had developments of the chips and the tariffs happening and the export licenses. So the question goes, having bought Nvidia in June 2020, I'm now on the verge of a 2,000% gain, and I'm tempted to take the money and run before I lose that chance of bagging a 20 bagger. Is there any chance that this company is a hold and might just become a perennial like Microsoft did? Alex, starting off with you, I mean, for the longest time, people have said a hold, maybe take a little bit of profits off the table, but there's no need for you to completely leave this stock. What would you be saying at this point, and particularly with what we are seeing in terms of the trade deals and tariffs and all of that?
Yes, good evening. Excuse me, good evening. Yeah, but look, I mean, when Nvidia is growing at such exponential rates, or potentially, as we expect it to grow at such exponential rates, yeah, it's very, very difficult to get a very good sense of where earnings are going to be 2, 3, 5 years from now. It could either be materially more than we think it is, because usually people tend to underestimate when things are very good, and obviously overestimate on the downside. So who knows where the earnings are going to be? There's a lot of moving factors at the moment. We simply do not know what the future is going to hold on a longer term view. Obviously, at the moment, the company is still doing very, very well. You have to look at also in a position in your portfolio context. So I imagine since he's done 20 bagger, if it was a sizable position, it would be a big part of his portfolio now. Then you have to perhaps consider your risk management there. But usually the best recipe is to keep on your winners, especially if you still consider runway ahead, which does seem to be the case here at Nvidia. Valuations are baffling and so forth, but as I say, if you do the exponential numbers, it can unwind quite quickly, especially if it's a bit more than the market's currently pricing in.
And actually, it's quite interesting because sometimes we'll hold on to the short-term price moves. Of course, we know that the geopolitics will affect trading on one day and then, trading the next. And actually, when I'm looking at that chart on a longer term, JP, it's still pushing higher. So how would you be looking at Nvidia right now?
Well, I think firstly, well done to the viewer for buying in 2020 and still holding the shares. I mean, in 2020, no one even thought about AI. You bought Nvidia because of graphics chips and maybe a little bit of Bitcoin mining. And look where we are today. Today, they make all their profits from the chips that go into artificial intelligence. So well done. I agree with Alex. It's very difficult for a company in this space that's growing so strongly, exponential growth rates, to try and put yourself 3 to 5 years in the future and say, what does the company look like then? Remember that there's an AI arms race happening, and they are selling the picks and shovels, the hardware that needs to go into this arms race. So it's the perfect place to be. But the question is, once everyone has got their chips and the big data centers have been built, what then? And people will answer to say, well, then there'll be more chips, the next generation of chips, more expensive chips. Or at least the latest technology. So people will need to have a technology refresh, and that will be a new cycle for Nvidia. So again, I'm not necessarily too negative of the company, but I'm also not necessarily bullish at this price because it has gone up a lot. It's a very difficult one, and that's why I have a little bit of Nvidia in my portfolio because of it being such an exciting company. But I keep the position small, because again, there is a scenario out there 3 to 5 years from now that the arms race is over. We find that AI does not answer all life's questions as we hoped it would. And then their sales will be much lower 3 to 5 years from now than what it is today.
Well, talking about exciting, a lot of people have been excited about Sasol lately, and we saw that share surging 10% today after they released their trading statement. Alex, your view on Sasol, and of course I've been asking, is Sasol turning a corner? Is that clear or maybe not so clear at this point, even with what they're expecting out of their results?
Yeah, so my view on Sasol has not changed. For me, the business has still got high probability of got an existential crisis over time. So if I think about foreign investors, all the options they have, why would they want to choose Sasol? So I think that means the only marginal buyer is really South Africans. And we have seen a lot of South African pension funds have capitulated on Sasol over the years. It is simply not the same business as it was perhaps 15 years ago. Quality of assets, management, the overall staff in the business, and obviously global fundamentals have changed over a period of time. Now, that doesn't mean Sasol can not have its time in the sun. Certainly the stars can align and they can probably double or tenfold even, if things really do well for them. But, if you take a medium to long-term view, I'm struggling to see how this business is going to continuously earn returns, excess cost of capital, how it will actually be a big dividend payer, and how it will continue to navigate the complexities that the changing world is facing. So for me, it's more of a trader stock than a buy and hold stock. Today's update, it does seem to be slightly better than some of the broker consensus we're looking for. But there's a couple of ones in there that you also have to work out. And if you do that, then the numbers seems to be quite in line. So I do think it was perhaps a bit of overreaction or perhaps some short covering that explains the movement today.
Well, I mean, what jumped out at me is that they've ticked some of the boxes that people have been waiting to be ticked. For example, the kind of turnaround in chemicals prices, even amid the volatile oil market, and also significantly less impairments. I mean, are these not things worth holding on to here, JP?
Sure, Zanati, that's really a silver lining. Just because someone has less impairments, the point is, if they have impairments at all, it implies that their expected returns from this point forward is less than what their expected returns were 6 months ago or a year ago when they last did the impairment test. So, no, I'm in the same boat as Alex. I'm also negative Sasol. I did not cover my short today. It is a small short, but we still have a Sasol short. And I also believe in that existential crisis. We all know about the existential crisis when it comes to oil and coal and emissions in South Africa. But I still say that the next issue we're going to have, and people are writing about it already, is plastics. And if you read about what people say about microplastics and the link between plastics and cancer incidents going up very sharply in the last few years, the US operations to a large extent produce the raw material for plastics. So no, that is tomorrow's existential problem for Sasol. So no, just because it exists doesn't mean you need to own it. So I choose not to own Sasol.
Interesting point. Just because it exists doesn't mean you have to own it. Alex, let's go into hospitality. Your view on Southern Sun. I do believe that it has been one of the better performers in that hospitality space.
Yes, it's been one of my stock picks in the recent months, and I'm still very bullish on the counter. I think the business currently generating enormous amount of cash, so they're going to be in a net cash position in my view in the next set of results. However, they are going to do a lot of CapEx going forward, but the balance sheet is very strong, as I alluded to, and they're generating very good cash. I think the market's underestimating the earnings growth in this business. As you fill the capacity, the utilization rate's going up to, call it close to 65%, then you start getting some pricing power. And in fact, from that pricing power, what you can charge per room is going to be much more than the costs. And after COVID, of course, they have really streamlined the portfolio, running the costs very, very lean. So I think there's going to be operational leverage expansion, meaning margins will continue to expand. And cash earnings, of course, is very, very strong in this business, much higher than the accounting earnings. So I think dividends will follow. They can easily fund the CapEx. Shares are tightly held. So that means that one or two big investors wants to get into here, they're going to have to pay a big premium for it. Probably more share buybacks to happen. And they've got assets that is very high quality that you can't replicate in South Africa. Specifically assets that's based in the Western Cape and like of course Slanga and so forth. So those assets, the replacement value of those assets must be multiples of what a market cap is. and lastly, a very good manager, a CEO in myself. So I think the business is very well positioned. It's certainly one to hold. And if you haven't owned it yet, worth looking into.
JP, I think if I remember correctly, your favorite there is Sun International. Where would you be placing Southern Sun?
Also near the top of that list. I really like the Southern Sun management team. It is a hotels business, while Sun International is more a gaming business, gambling, casinos, and more online casinos and online betting and gambling these days. But I like both. I also own some Togo gaming, and that's been disappointing because they really missed the boat on the movement to online gaming and gambling. They still have the physical casino footprint to a large extent, so really disappointed they missed the boat. Maybe they can catch up. We'll need to wait and see. That does mean that the Togo gaming shares are very, very cheap.
Yeah.
And another one that's quite cheap is City Lodge. And I'm really disappointed that City Lodge couldn't do close to as well as Southern Sun has done in executing in the hotel business. Now, there are reasons for that. Southern Sun has got more exposure to the Western Cape and KwaZulu-Natal, as Alex mentioned. Well, City Lodge is more a Gauteng-based business. And secondly, City Lodge has got more of the business traveler, which has been under more pressure because a lot of meetings these days happen over Zoom or Microsoft Teams. So because of those reasons, Southern Sun has by far been the best hotel business. But at some point in time, sometimes the cheap shares catch up. And I'm hopeful that maybe it's time for City Lodge and perhaps even Sogo Gaming to catch up in the near term.
All right. JP, HCI. With HCI now considering an investment in the gas power plant in Mossel Bay and the share price at the high right and very low left chart, is this a good time to buy?
I really like HCI. Just before the break, we spoke about Sogo Gaming and Southern Sun. Those are the two biggest parts of HCI's portfolio, the net asset value. The other big part is Impact Oil and Gas, and then a bunch of smaller investments, including what they might do in Mossel Bay. Which it's a different area and a different right to the Namibian rights where Impact Oil and Gas is the main vehicle there. And then they've got Frontier Transport, they've got the ETV business, Deneb, and a few other small pieces. So I really like HCI, and I really hope that they both strike a very nice oil find in Namibia, but also that they can do something with that gas where effectively their partner walked away and gave them that right on the southern South African coast. And we need energy in this country. We spoke about Sasol as well. One of these days, Sasol is not going to give us the energy we require. So if they can do something clever with the gas that's offshore and feed it onshore, I think HCI can do well from that. So I like the share, yes.
Okay, yeah. I also see that investors have been pleased with it today with an uptick of about 3%. Alex, HCI, well, the viewer's asking, is this a short-term long or long-term long? So either way, clearly the viewer wants to buy it. Would you be putting a timeline if you were to buy it at this point, Alex?
First, I would concur with Jean-Pierre's view there. I would suggest it's more for longer-term hold here because you're playing the call option on Impact Gas as well as what's happening in Mossel Bay. These aren't going to generate cash flows anytime soon, so business need to be wary of that. One of the reasons why the share price went up about 18 months ago and then fell down is because there was speculation that they might sell that stake. And I think a lot of speculators came involved and then sold off the shares. But there's a lot of corporate action potential as well in the business. They could look to unbundle assets or sell assets and unlock value like that because the underlying sum of the parts is just far below, of the current valuation, just far below the sum of the parts. So it is certainly one for those with a bit more patience. Charlie Copland's got an excellent capital allocation record, and I'm sure he will create some value from these levels going forward. So I'm also constructive on HCI.
Okay. Well, let's get into British American Tobacco. Why does it keep going up? And if Reynert and Berkshire Hathaway moving into cash is related? Yeah, JP?
Well, I don't know if it's related. Reynert actually sold some of their BAT shares to go into cash, but generally, yes, shrewd capital allocators are increasing their cash at current valuation levels And that means valuation levels have risen. And BAT is no exception. It has risen quite sharply over the last 18 months or so. It was very cheap for a very long time, trading at a very high dividend yield, and the expectation was they would show very little growth. But below the surface, there was a business that was slightly shrinking, the cigarettes business, and a business that was growing very strongly, the next generation products business. And over time, if you have one part shrinking and the other one growing strongly, the stronger growing part gets bigger and bigger, and people start noticing. And that seems to be what has happened with British American Tobacco. At the same time, all tobacco stocks have done very well. Philip Morris, which has the biggest new generation products portfolio, has done very, very well, but so has Altria, which actually has got a disappointing next generation product business, but they've also gone up like almost 100% over the last 18 months, notwithstanding more cigarette exposure and also stake in Anheuser-Busch. So the whole tobacco sector, I think people have migrated to as they potentially look for more defensive shares, and they realize that people might stop smoking, but they're not going to stop taking in nicotine. And seeing that nicotine is so addictive, it's a wonderful product to sell and make money from people's addiction. And that's what these companies do. So the share price has reacted to people realizing that, I think.
Alex, would you be capitalizing on this kind of renewed optimism and growth in BAT?
I'm a bit more cautious now on prospects. I've been very bullish on BAT over the last 3 or so years. So I think it certainly represents more fair value now. I think some of the positives is that they're obviously starting to sell some of their stake in India, which is reducing debt. That's a positive because valuation is very high there. Regulatory risk in the US has reduced a little bit compared to the last 18 or so months. And there's also a potential that they could be completely prohibiting illicit new generation products in the US. Now, that would be very big beneficial for BAT because the black market is very, very large. So that is something I think that market's penciling in, because the US market, that market can go back from being ex-growth to showing some growth, then certainly the investors will be putting a much higher multiple on British American Tobacco. But the core combustible business is still going backwards. We all know that. It's all about how quickly the new generation can do so. So I think most of the margin of safety perhaps is not there where it used to be, but it probably could do a lot worse than buying BATs.
All right. Well, here's one that we don't talk about a lot. Sygnia. It has had a good run of late. Is it still worth a punt at these levels? JP?
We still own our Sygnia shares. I like the business. I think their branding is very good. And what they do is they've got a very good mix between low-cost products and high-cost products.
Okay.
And they've been growing the retail side of the business very well. So that means that they can have the positive branding regarding the low-cost products, but then people get excited by the high-cost products. I think they even have a passive fund that tracks an index, but it charges a performance fee. Is the only fund that I know of that does that. But it works. People are flowing to that fund because it has done very well on the back of technology, international technology and disruption. So yes, the CEO sometimes, I don't necessarily agree with everything she says or does, but the business is bigger than the CEO, and I like the business, and that's why we hold the shares.
Yeah, I think I saw that she's now moving out of the UK, saying that she's coming back to South Africa because of tax issues. Anyway, back to the business. Alex, your view on Sygnia?
Yeah, I agree there with Jean-Pierre. So I think one thing to also remember, this business is still quite a rare growth story in South Africa. Probably can grow double-digit earnings for a period of time. Yielding about 8%, very strong cash earnings, so they can certainly support that dividend, do all the growth initiatives they have and perhaps even do some M&A. And of course, the retail that Jean-Pierre refers to is higher margin as well. So that does give you some operational leverage as well. We all know the institutional market is struggling and shrinking, but certainly in the retail, specifically the global ETFs, there's still lots of room for growth there and new products to be launched. And they're also gaining a little bit on the umbrella side and so forth. So yes, we like Sygnia.
All right. Well, let's get into building materials. Is Cash Build, please ask the panel if Cash Build is at a good price to buy at these levels. Yeah, JP, would you be buying cash build at this point, considering where the economy is and the numbers that they have been churning out?
So things are very, very tough in the building supplies sector. My preference in the sector is Italtile. They came out with a trading statement in the last week saying that earnings will be very slightly up, which I think is a positive outcome for how difficult things are. Cashbuild has been going backwards for a while, mostly because of the P&L hardware acquisition they made, where they've got some indigestion because of that. It didn't quite work out for them. But they've now mostly sorted it out and made another acquisition. So at least they're keeping their eyes open for opportunities. You probably need the economy to show a bit more growth and for people to have some disposable income that they then rather use to improve their houses, like we saw during the COVID lockdown period. That was wonderful for these companies. And we need to get back to some discretionary extra income in people's pockets before these both companies and therefore both shares will do much better. So I think there's a margin of safety in the share prices of both Italtile and Cashbuild. I think they're quite cheap at the current levels. And if you are patient, you can buy them if you expect that things are going to improve our economy. And I really hope that will be the case in the next few years.
Yeah, the share price doing well today as well. Alex, would you be prepared to be that patient?
Yeah, it's a difficult one because I'm invested in Italtile and obviously going backwards, or no, actually having down 30% this year, give or take. But it's incredibly cheap if you have a normalized situation in South Africa. I mean, if you just have 2% GDP growth, Italtile will probably double or triple from these levels because its rating is very, very low relative to history. Still generates very good high margins, doesn't have any debt, and they can just show some form of growth again, like they did call it in the mid 2010s and so forth. This business could really surprise. But they do have a bit of issues in the manufacturing side of ceramics, where we do have a lot of competition from Chinese importers of tiles by Mozambique, which is a problem. So that's something to be cognizant of. Within Cashbuild, I've noticed some of the last couple of quarter updates, the like-for-like numbers were a little bit better than previously. So that's a positive. So that tells me if the cycle does start to turn, they're probably going to have some decent operational leverage to the upside. So both, I think, looks good, but you need economic activity of, call it at least 1%. At the moment, we're not anywhere near that, so that's a problem.
Yeah, all right. Well, gents, let's get to your stock picks. JP, where are you finding value today?
I'm finding value in a real estate company that is domiciled in Malta but is listed on the JSE, MAS PLC. And it's been in the news because there's a bit of a tussle between some institutional shareholders and a group headed by Martin Slobbert, Prime Capital, who's also the controlling partner in the development joint venture that MAS PLC has with Prime Capital. And Mr. Slobbert is offering to buy shares from people at just under 29 Rand. And I think that will align the interests of him and external shareholders. So I expect the value unlock strategy to be followed the next 18 months. And the trick here is we have a lot of very astute, shrewd entrepreneurs in our local property sector. And the golden rule is also always make sure you're sitting on their side of the table, not the other side of the table. And I think with the latest transactions and what will happen from here on out the next 18 months, for the first time in a long while, minority shareholders in MAS will sit on the same side of the table to Martin Slobbert. And that's why I think that current prices with this value unlock strategy the next 18 months, you can do very well with MAS PLC shares. All
right. Alex, your stock pick for today.
Yeah, so I'm going for Advitech. They gave a trading statement today. I think pretty much in line with what we were expecting. We'll have to wait for the detailed results, but I think this company, if they can continue to generate, call it earnings next to 10% over the medium term, is very well positioned. Share price hasn't done much this year. One of the large shareholders, of course, have been selling. They continue to do acquisitions in, that selling also stops. I think that's going to help a little bit going forward, but they've also doing acquisitions in East Africa. And if you look at the margins there, it's quite well. So it seems like that capital allocation strategy is working. So we are, of course, optimistic. We think it's one of the few structural growth stories in South Africa, irrespective of what the economy is doing at the moment. So an evaluation we think is fair as well. So we like Advitech at current levels.
Well, gents, thank you so much for educating us today. Really appreciate it. That is all for tonight's Stockwatch. Thanks to our guest, Pierre Verster from Protea Capital Management and Alex Duys from Umthombo Wealth. Up next, the close. Stay watching.